How's it going, everybody? So today we're going to talk about the best breakouts. Going to do something a little different than the trade recaps. And I want to talk about breakouts because I know that that's kind of my style. You know, the context of the breakout matters. I'm sure there are a lot of traders that try breakouts every single day and they get incredibly mixed results. I mean, sometimes I can be guilty of taking breakouts that just aren't very good, but the context of the breakout is what increases the probability of it working versus it just not working at all, stuffing and being a terrible setup. And I think the most important part when it's talking about breakouts or even breakdowns is it's higher time frame first. It's the daily chart looking really good. And then once the daily chart looks good, then the intraday also looking very good. So checking all the boxes, daily chart first, then a lower time frame. The problem with a lot of people, myself included at times, is you just get caught up in the lower time frame. You're looking at a 1 minute chart, you're looking at a 2 minute chart, maybe a 5 minute chart. You kind of forget what's going on the daily chart, and then you just go for a new high or a new low, and they don't work very often. So it's all about making sure that everything lines up. The context is correct. Higher time frame first, and then lower time frame. And everything looks good, all boxes being checked. Nothing works 100% of the time, but starting top-down approach, it can increase the probability of breakouts working. And the same can be said for breakdowns. Daily chart first, a major support level, clear consolidation, and then it breaks, it can have some follow through, and then vice versa to the upside when we're looking for a stock to break out to the upside, a very clear area of resistance, tight price compression on the daily chart, and then the sentiment being right, making sure that if there is something that is possibly going to break out to the upside, the overall market is strong. And then if something is going to break down to the downside, that the overall market is kind of weak. And then when everything lines up, that's when those moves can be pretty big. And a really good breakout happened on Tesla today. And I just want to analyze top-down approach, daily chart first, and then intraday, because I think this is an A-plus setup and something that I like in my playbook as far as consolidation breaks on the daily chart. And I want to focus on just these setups, and that's it. Besides stocks that have earnings or maybe breaking news during the day, just focusing on those tight daily chart range breaks, the price compression on the daily first, they can be such good setups. And then everything else in between is kind of just noise. So let's talk about what I saw on Tesla. So Tesla did have a big gap up on earnings a little bit ago. It's pulled back, but look at the last about 10 trading days. It's just gone sideways. And even the prior day, the 20th, May 20th, you had an inside day. It's holding the short-term moving averages. I'm a big fan of looking at the 9 EMA, the 20 SMA, the 50 SMA, and the 200 SMA on the daily charts. Really, the most important of those would be just kind of the shorter ones, the 9 EMA, the 20. But you have an inside day on the 20th, and then it's above the 9 EMA, the 20 SMA, and as you can see, it made an attempt to break down and then immediately reclaim these short-term moving averages, and it's been in a range. You could say the range is upside 180 and the downside is about 168. Don't have to be perfect, but just realizing that that's about the range that it's been in. So just waiting for Tesla to essentially break one way. And a lot of people like Tesla. So there is a chance that if it can break to the upside, that it'll get that elevated volume. So you kind of add the factor of people liking the stock. Also, the overall market is holding up relatively well. It has been going sideways. It's holding the shorter term moving averages, the 9 EMA, the 20 SMA. It had an inside day the prior day. And then off the open today, we had a very strong move off prior day close. And then we got above prior day high. And then you had a nice long period of consolidation. So not only do we have price compression on the daily, but you also get price compression on the intraday. Tesla had a very strong opening drive and then just held up pretty well. And the fact that this went sideways in this tight period of consolidation on the intraday for as long as it did, look at it holding the upper portion of the range after the opening drive off the open, and then just consolidates under 180, which is a very key technical level. And then ends up pushing a little bit, has a higher low, and then we're getting to a very key area of intraday resistance around 179.50. And my thought process is that if we can clear out the intraday high, knowing that not only the intraday looks really good as far as price compression, we also have the price compression on the daily, and 180 is a major key technical level of resistance. if we can clear out that 180 pretty quickly, there's a chance that this can accelerate to the upside. And it checked all the boxes. Daily chart first, price compression, intraday, price compression, nice consolidation channel, breaks out of the channel. And then what I try to do is anticipate the high a day because I want to get in just before that 180 level. And then once it clears that high a day, in the money pretty quickly, and then just try to do a good job at protecting the downside if for some reason it fails. But this goes very quickly. And one of the most important things, look at the bottom of this chart. It breaks out on volume. So you have everything lining up. Daily chart, intraday, and then you get the breakout around the key technical level on elevated volume. And then you get above that 180 and it starts to accelerate very quickly to the upside. And at the end of the day, I am a scalper. So it's not like I'm ever holding any trade for a very long period of time. But this goes from 179.50 to 182 in a very short period of time. And knowing that it's an A+ setup, this is a situation in which I would size up a little bit because I have seen this happen before. I know the probability is much better as far as follow through. And this is where identifying the setup and having everything line up and allowing it to be an A+ setup just based on my experience and the things that I've seen in the past, being able to size up, getting some nice follow through. It's not like I've held for a large move, get a very similar move, but because of the size, that's where the P&L can add up. And it usually only takes a handful of these setups per month to be able to have a really nice trading month. The only downside with this is this kind of setup does not happen often. So it's about being patient and waiting for the daily chart to look a very specific way. I'm a big fan of those daily range breaks because anything in between is usually just chop. And it allows you to get chopped up because you think you see something there that's not. So these daily range breaks can be very powerful and they're amazing setups, but they do not happen often. That's why when they do, you got to be there to take advantage of it. And today was a great example of everything lining up and a breakout having high probability because of the context in which it's set up. And then you get the nice move above the technical level. And there you go. That is a great setup. So that was a quick overview of the Tesla breakout and why I thought it was a quality setup. I appreciate you watching the video and I'll see you in the next one.